Good afternoon, and welcome to the Owner's Ally live stream, the first edition of the year. Excited to be here with an incredible panel talking about commercial banking in 2026, the realities with SBA, M&A, and the market. Before we get to the panel, I wanted to take just a moment to talk about a bit of a rebrand that we've done. So for me in my career, I think that the thing that I'm most proud of is being co-founder of a company called Network Medics that I started in my basement. And after working on it for about a decade, I ultimately sold that business in 2018. And I thought I was ready to do it when I jumped into doing it by myself. And as I learned by fire along the way, I really wasn't. I learned that being a good operator doesn't make you an expert in selling your business. I learned that sometimes you're not ready to receive the information that's important to you, and a number of other hard lessons as I sort of stumbled along the way. And so that's why I've adopted the mindset of the owner's ally. That's what I want to be to you, whether I'm representing you in the sale of your business or just having a beer with you and talking to you about what's going on in your life and your business. I want to be the person that I wish I had in my corner back then for you. So that's why we're taking the owner's ally approach, and trying to bring different educational content and whatever resources you need. One of the biggest resources any owner needs is to have a great team. It takes a village to get any of this stuff done, and having a great commercial banker is an essential member of that team. So I'm excited to introduce you to a number of great bankers that I know of in the market here. First, though, a little bit of housekeeping. This session is for educational purposes only. It does not constitute accounting, financial, legal, or tax advice. And the other element that I always forget, and I'm hoping that we'll have some folks participate in this today, you have the ability to ask our guests a question. All you have to do is leave a comment on the LinkedIn event page that you used to get here. That'll show up for us over here, and we'll ask those questions as we go. So with that, I will bring our guests on, and here we go. Welcome, everybody. With us today, we've got Jeff Boyle, who is the Senior Vice President and Commercial Loan Officer at Scale Bank. Welcome, Jeff. Josh Laffin, Vice President and SBA Lending at Bank. Welcome.
Hey, James.
Also got Natalie Schultz, Vice President and Relationship Manager for Business Banking at Associated Bank. Welcome, Natalie. And then we have Joe Veliz, the Vice President and Commercial Banker at Highland Bank. Hi, Joe.
Good afternoon, James.
All right. So I just kind of want to kick it off just sort of high level and just kind of ask each of you sort of from your vantage point, what's kind of the biggest shift you've seen in commercial banking and in lending over the last year or so? You can start with Jeff on that.
Yeah, I'll jump in. I manage a portfolio of businesses all in some different industries. I think part of it is just being scrappy and reacting to market conditions. Whether it's tariffs or post-COVID demand, how that's affected their businesses, staffing issues, retirements, just day-to-day challenges. A lot of the fraud concerns. There's some recent some fraud. And so I think they're used to being scrappy, private-owned companies. They've been through a lot's been thrown out in the last 10 years, COVID, and that's what I noticed. It's just them reaching out to people they know and trust to be as much help as they can.
All right, Josh, what are your thoughts?
It's a really wild time in the market, and I feel like I say that every year, but it's especially true in 2026 when you think about where interest rates have come and gone in the last 5 years. Everyone looks at the FOMC Fed funds target for the overnight rate. Prime is not indicative of the markets and rates for that matter. And so helping folks understand what funding costs look like in 2026 and beyond, looking at the treasury curve as opposed to just prime or SOFR. There's a lot going on. We're transitioning from I think we're in a declining rate environment, but that does interesting things for business owners when they require financing. So,
All right, thanks. And Joe, what are your thoughts?
Yeah, I think change really is cash flow matters more now. We have to understand that there's going to potentially be more equity in projects to make them work. So I think that's our biggest change we'll see with the conversations with our clients and our prospects.
Mm-hmm. And the sort of additional equity need is that coming from discrepancies in valuation or the products being used? What's sort of causing that?
Yeah, I think rising costs of the project, right? If we're looking for a new build, something that you built 3 years ago is a lot more expensive this year, and unfortunately, when we look at those plans, it doesn't always work. So more equity needs to go into the project, and that cash flow truly does really matter. We have to understand that with the rate environment changing as much as it does, we have to make sure that what they can afford today is what they can afford tomorrow.
Mm-hmm. Mm-hmm. Well, what are your conversations, related to that? What are the conversations with business owners looking like in terms of lending, in terms of banking? How are those conversations going right now? Josh, you want to chime in?
Yeah, and so a good example would be there's a prospect we looked at. It was a brewery, and this is a pretty unique time to build a brewery.
Mm-hmm.
And so for a number of reasons, one of which is that's a market where we're seeing actually a lot of those businesses not experience the success they've had historically. So maybe that's over saturation in the market, but then two, you're looking to build a brewery. That's expensive, to Joe's point, and rates are still high and compared to pandemic era lows, but I think rates are still in a good spot. But I think it's helping people understand this is a lot of money, and it's if it's a projection based deal, you don't have historical cash flows to support the proposed debt load. That's a personal guarantee means something. And so how are we getting comfortable with this? How are you comfortable with this? A lot of conversations look and smell like that.
Mm-hmm. And Jeff, for you, from what I understand, most of the work that you're doing is conventional financing. Is that, how are those conversations happening?
Yeah, I'm involved in the SBA deals that take place, but to your point, on the day-to-day basis of working capital, the post-COVID world, so many businesses receive funds for PPP loans or EUC credits, and they were out of their lines for a couple of years where maybe they had never been before. And we're seeing that usage come back up to normal levels. And mentioning the interest rate environment, obviously when rates drop, that helps expenses and interest expense. So more conversations about that and being, careful who you're selling to, making sure it's an appropriate credit limits for those people. And just really seeing more of that we used to. For years and years, people were used to being in their lines, and all of a sudden they weren't, and all of a sudden they're back again. And especially for those businesses that I mentioned earlier, COVID demand has changed. They've really saw it increase, and all of a sudden their inventory levels may be a little higher than they want them to be because they're stocking up for the demand of COVID and how that's going. So we're seeing that.
Mm-hmm. Mm-hmm. Are there any industries that are particularly hot right now, or any that are kind of having issues with getting financing? Joe, you seem like you want to jump in there.
Really, we're not. I don't necessarily, and for us, I don't think we're necessarily restrictive to the industry, but it's understanding the business inside the industry, right? Mm-hmm. Understanding how a structure can fit to help them with their business lending needs, more than necessarily the industry as a whole. So that's kind of our approach. Each can be done differently. It's how creative do we need to be to make something work for both the bank and the client.
Mm-hmm. Josh or Jeff, are you seeing any sort of movement in the direction of one industry or another?
We're seeing Oh, go ahead. Sorry, Jeff.
Go ahead, Jeff. You go.
In certain industries, what we're seeing is some demand where, some businesses are actually in the marketplace because of just environment, demographic issues, and we're seeing some of our customers, we're seeing opportunities there where they're making small acquisitions. And security industry, for example, we've seen a lot of security companies that are smaller that are selling. That's just one example of industry.
Welcome, Natalie.
Hi, sorry
As-
about that.
technical issues. That's all right. We're talking about kind of where the appetite is with banks right now, and I'm curious if you're seeing either movement in specific industries or if there's certain sectors that are having trouble getting financing right now.
I think everything is pretty steady right now. What I'm seeing in the multifamily housing industry right now is those loans that are coming up for maturity. The rents haven't caught up, increased enough to support the new interest rate. Also, I've been working with the buyers who want to increase their portfolio for multifamily, and for the loan size, the cash flow is just not there. So we've looked at quite a few properties for a specific buyer I have, and they're just waiting for that property to come along, that the numbers are great and the property is upkept, and that's the only thing that I'm seeing right now that I'm currently struggling with on the multifamily housing side of things.
Okay, and you touched on another point there, where a number of businesses and commercial real estate and we were kind of all over the place, took financing at very nice rates and had refinance as part of their plan. Now they're coming into a higher rate environment. Are you seeing that affect your client base?
I am, and I want to mention that the banks, we like to do our due diligence, and we always put in a stress test. So starting last year, I'm sure most banks, with annual reviews, they're putting that stress test in their spread, saying, hey, right now you're at a 3.2. What does that rate or that payment look like with your current rents at a rate of 6.5? And working with clients and customers, always work with the bank and make sure that you understand, how they're running their numbers, so they can make a plan with your clients to make sure that their loan is refinanced.
What about the rest of you? Did you have any examples of that issue coming up with your clients?
Yeah, we definitely have some rates that are resetting, and you're right. We used to pay 3%, it's say 6 or double. A lot of residential occupied real estate, so it's a little bit of stress for them. But we're definitely seeing it. It's pretty normal.
Okay. Now, for a business owner who is looking at refinancing, whatever it is that they need to refinance in the next year or two, what do they need to start doing now to get ready for that process with you? Do you want to take that one, Josh?
Yeah, I think that's great. There's a lot that a small business owner can do ahead of time, whether it's a refinance or just going to get financing in general that they can prepare for up front. If they're going to be doing an SBA loan, and if they're a sole owner, and if they don't have life insurance, or they do, just making sure that they have that lined up right away. Or, for an existing business, having all of the insurance in place that's needed. That can be a little bit of a lengthy process to get updated. When we're trying to get a deal funded, being current on taxes, having your PFS up to speed. I think those are really low-hanging fruit items that they could be doing. If it's a new business, having a very well-vetted business plan, cash flow projections, leaning on, their trusted advisors, whether it's a SCORE consultant or an SBDC person. I think there's a lot of work that can go into it to make the financing conversation easier, whether it's new or refi.
What about Joe? Did you have thoughts on that?
Yeah, I think Josh is right on. I think really it comes down to having really great partners, especially if you're new to lending, to have those people in place. So those conversations are easier with bankers. But also in the refinance, have great conversations with your banker early on, so that there is no surprises, that we're not trying to kick the can down the road, and build a plan and be willing to work the plan together. I think it's the biggest thing for bankers, clients, and the strategic partners they can have.
Mhm. I think that leads me down to wanting to talk about SBA lending, and that's, we talk to a lot of buyers who are planning on using SBA financing. There have been a lot of changes in the last year, so I think I'll turn this to you, Natalie. Can you talk about what some of those big changes were and how they're affecting your clients?
Mm-hmm. Right. So a lot of the changes that are affecting my clients are the seller financing portion of the deal. So if there is any seller financing that comes into play that's used towards the down payment of the SBA note, that portion needs to be on full standby. And that, I think, is coming to a shock for most sellers right now. But again, working with those key advisors, giving the advice, how does that work, working with your attorneys, working with your brokers, having those conversations up front. That way you're not starting the process or halfway through the process and it's becoming a surprise. Most of the lenders on here were very good at walking through step by step what to expect with SBA financing, and just give everyone grace, because when everything changes, I would love to say that everything's buttoned up tight and everyone knows what's happening, but unfortunately, we're learning as we go as well, and just be graceful with everyone, make sure everyone is on the same page, and just continue to get that full application and full expectations at the beginning of the process, so that way we know what to expect when we're going down the road.
Mm-hmm. And when you say full standby, what do you mean?
That means that the seller cannot be paid until the SBA note is fully paid back. And I think that was the biggest surprise that I've had buyers talk about in the last 6 months.
Mm-hmm. Mm-hmm. Now, Josh, I know that you had a surprise with SBA that came along recently as well, as it relates to immigration status. Can you talk about that change and how it's affecting your clients?
Yeah, and that is that's a story that's still being written right now as we continue to work through the minutia of the various changes that were implemented. But having shifted from, hey, as long as the business is majority owned majority by a U.S. citizen, we're okay, to nothing, to, well, maybe 5% is okay. There's a little bit of whiplash that's happening, and that's impacted a ton of folks, and especially with respect to green card holders. In my case specifically, where I think we have all the right information needed to document that they're they've applied to get the green card renewed, but it's not renewed. But they're a citizen for 4 years, but then once they get the card, it's 10 years, and there's a lot of uncertainty. But then given the backdrop of where we're at in the climate in Minnesota, it's a kind of unique time to go to the U.S. government and raise your hand and say, hey, am I a citizen or not?
Mm-hmm.
And and if you don't have your papers on you, which that's what it is, it's just paper, then you don't have the documentation needed to prove that you are. And so it's kind of a unique time with that topic.
Yeah. Yeah. Joe, have you seen other stubbles in SBA financing in the last year?
Yeah, I think we have a little bit, right? I think some surprises are the fees are back. And I think that's okay. I think really SBA is kind of back doing prudent underwriting, right? So it's having those conversations that that it's back to making sure that we can fund the SBA, make sure that we can continue to move this program along, so that we continue to have this program for other business owners as well, to help understand that this may take a little bit longer. It didn't for a little while, but it's being prudent. It's making sure that the bank and the owners are going to be in the right spot 5 years from now, and I think that's the positive change with what's going on with this, is that everybody's going to be in a better spot in the future. So I do see that being a difficult change, but it's to help understanding why that change needed to come back.
And for, at VR, we've seen a couple of circumstances where deals have fallen apart due to challenges of SBA financing. So what advice would you have for a business owner who's looking at doing an acquisition this year or next, as they prepare to obtain financing for it?
Yeah, I would say be ready to go right early on. Have your plan, like Josh was saying earlier, right? Have the plan up front with your trusted business partners, like a broker, like a CPA, attorney, to make sure that you've got the steps in place and that you're ready to go and have a package that is ready to go for the SBA, for a bank, for a broker. I think that's going to be what needs to happen now, where again, we talk about it needs to be more prudent. It's not going to be quick and down and dirty and get it done. It's make sure all the I's are dotted and the T's are crossed.
Another thing I jump in with on that, James, is, I'm doing 1, 2, 3 partner buyouts at the moment, and whether it's a partnership buyout or whether it's I'm buying a business off the street, having a good purchase agreement or a good purchase price is a great place to start. And the one in particular that I'm looking at today, where we're getting it processed in E-Tran, it's kind of a like a buzzer beater situation. I'm thinking about that one in particular because the partner who is selling, the selling party, was asking an insane amount for their half of the business.
Yeah, right.
Which you've never seen before. And she's like, "What do you think?" My borrower. And we did some quick math on what the valuation should be. And just like, what, it's never going to value out. That's a non-starter, it's going to waste everyone's time. Try to go in at a number closer to this, and just trying to help give her a little bit of advice on how to structure the negotiation. And it worked out. I mean, he came down substantially. Business valuation supported it. But I think it's that's another area where if you're kicking the tires on a deal, whether it's a partner buyout or a new deal, just making sure you're going in at the right price, because that can create a ton of heartburn down the road when the business valuation actually comes in, to the degree where it could, kill things if there's no structuring flexibility.
Right. Well, and related to that, when there is a value gap like that, there's some tools that we can use to address that, right? We can do seller carryback, or we can do an earnout or something like that. Some of these things are forbidden by the SBA. So how are you seeing deals get structured when there is that value gap, or that the structure needs to be a little more creative?
Like you said, the earnout doesn't work, but a buyer rebate does, which is, forgivable note. So there are things you can do on that side to make the seller feel like they're still getting their number. But I've also seen like one deal in particular where we couldn't go SBA. We had to go conventional on the acquisition because he was buying 60% of the business, and the remaining 40% was being bought in 2 20% tranches, where he could effectively get the next tranche, 2 tranches for $0. So he had some nice downside protections, but then also he there's that earnout element to it, but that would never fly SBA for a couple different reasons. And so, deal structure matters, but to your point, there are options. They don't always work SBA. Maybe you have to pivot if it's financed.
Mhm. Jeff, did you have? It looked like you had a comment there.
Well, I mean, I think like everybody, I agree. You got to have trusted people, and some of the deals we see that are non SBA, it's really understanding when you're acquiring something with the ad backs and really evaluating how to help their business and bringing it in, because a lot of these businesses have been around for a long time and maybe they're smaller, they've never acquired a business before. And sometimes we'll encourage them to say, hey, maybe bring in a fractional person to kind of help kind of reset things for you. So we're really evaluating this in a way that makes sense, because when you're presenting it to a bank, you have to show, why this is good for you. So that's also, again, just stressing, don't be afraid to bring people in to look at your business before you buy another.
So one thing I have in general, this is sort of anybody who wants to chime in on it, is overall, how would you rate for the bank's appetite to lend right now? Like, is there momentum in the market overall?
I'd say yes for us. I would say momentum is a great word. I would say for us in particular, we have deal flow is very strong for us, and so with that, there's no compromising on credit quality. And so I would say, if anything, two things can be true at once. We're really being stringent and prudent lenders with respect to our policy and the requirements of SBA for SBA deals in particular. But there's a lot of deal flow out there, and we're certainly seeing that. We cannot keep up, so that's good.
Mm-hmm. Natalie, what's been your experience?
I've definitely seen a pickup in the last 6 months of loan inquiries, refinances, and expansions, actually. So the cost of construction coming down is a huge win for 2026. We are looking for 2026 to be a big year in the metro. And I think I'm hearing that across all banks right now. So that's a good thing coming into 2026.
Mm-hmm.
Yeah, our second half of 25 was much busier than the first half, and we're actively looking to strong goals for 26 as well.
And Joe, how about you?
Yeah, I agree. Highland Bank, we are here. We're here to lend, and just really wanted to look at everything, see what's out there, be creative when we can be. But I do think banks in general are really positive what 26 is going to look like.
Mm-hmm. So you guys want to pull out your crystal balls? The Fed's meeting. Where are interest rates going? What's your prediction?
I hope they stay flat all year.
Holding steady and firm.
Yeah, I think we budgeted for 2 increases, or expect that probably means we just forget. We just don't know. Crystal balls.
Holding firm and predictable would be fantastic.
Yes.
Okay, so for anybody who's kind of been waiting in the sidelines right now, whether it be a refinance or an acquisition or equipment financing or whatever, what's the advice to them? How do they approach this year?
I love that question, and I think it's two. You answered it in 2 ways. The first is understanding why you're on the sidelines, understanding what is causing you to be there, but then also too is, will you have the conviction once that changes? Because you're going to have buying opportunities. I think the opportunities are out there and available if you're willing to find them. I just financed an acquisition where my client bought 4 businesses in their fields, but they were off market, and so that's where understanding where the opportunities are and having the conviction to pull the trigger is huge. And so I would say, whether it's understanding why you're on the sidelines, but then also holding yourself accountable to get off the sideline when the time is right, or maybe before the time is right, but you just see an opportunity.
Mm-hmm. Mm-hmm. Joe, what are your thoughts?
I think as long as it fits in your strategy to hold or to move forward, make sure you know what that strategy is at first, like Josh was saying. Find those opportunities. If it's the right thing for your business, absolutely take a look at it. If it's a stretch and it just doesn't feel right, then maybe stick with that. But whatever your strategy is, stick with the strategy you got.
Mm-hmm. And Natalie, I hope I didn't cut you off there, but it seemed like you were going to chime in.
I just want to mention to start early. You know, if you are on the fence and whatever that fence you need to hurdle is, if you start early enough, you can come up with a solution by the time you're ready to make your move. So just making sure you're communicating with your banker, your advisors, and really making your plan for 2026 and what the expectations are for everyone in this industry really brings things across the finish line.
Mm-hmm.
Mm-hmm. James, I think your question was really the equipment too, maybe a little bit. But our manufacturers, we've seen a lot of purchases to create efficiencies over the years, and we're actively trying to get ahead of it. Our CapEx plan, if they have a plan, we want to know about it. And we've been encouraging that, so we've got a lot of fun.
Okay. And kind of, that sort of makes me think about just taking a step back more broadly. How is technology affecting the banking and the lending itself, and in particular, are you starting to see AI tools come into the banking itself, and not just the market at large?
We actually have a client in particular who what they did for their business is almost completely replaced by AI right now.
Wow. Mm-hmm.
And that's something that happened overnight. And so that's an incredible, and I think you look past on the past 6 years, and there have been a lot of situations like that where the situation has changed overnight, and you have to find a way, what's the new path forward? Because it's not where you were. You're not where you were isn't where you're going. And so I think it's been interesting to see AI cannibalize industries as well. But no doubt there's a ton of efficiencies to be had there too. We've seen that as well.
Mm-hmm.
Yeah, just one example of a company that was marketing, and to Josh's point, that's transformed that industry in a lot of ways. Mm-hmm. They're adapting to that. So it's happening fast for certain industries. I think others it's slower, but when it does hit, it hits pretty fast.
Mm-hmm. Joe, how is AI affecting your daily life?
I think it's always a question whenever you look at a new opportunity. Like Josh said, can AI replace this? Well, mm-hmm. What is that going to look like, or how does it enhance it more than anything else? How does it make the business more efficient? How does it make it better? But that conversation needs to be had in every opportunity you look at, because it is so rapid and so fast, and it's growing so quickly and changing so much that we have to be prudent to understand for our clients, how does that impact those opportunities?
I'd love to jump in on that, because one place where I've seen AI more than I want to see is on the business plan creation side of the equation, because do you actually know what's in your business plan? Are you preparing this? There's value in there's a lot of very good resources out there in the world that can help you with the business plan and projections. And I had a meeting yesterday with someone, and he's like, well, I'll just throw it into AI quick and I'll get a business plan. It's like, mm-hmm. Not what I'm asking for.
Yeah. It's the rule of thumb that I go by is I only ever give AI 80% credibility. It's good and it's getting better. It's never quite right, and you still have to know what's wrong because it also hallucinates. So you have to be able to identify where it's lacking, because it is. Has AI been involved in your life, Natalie?
I think AI is going to be a great tool for preventing fraud for business owners, learning the business owners' behaviors and their transactions in the banking world. A lot of banks right now are piloting AI fraud prevention, things like that. So I think there's going to be a lot of benefits coming from AI, and as well as saving business owners money. That's a win-win. But again, cautiously making sure that we're accurate.
Mm-hmm. Mm-hmm. Yeah, that's a good point there too, as it relates to the fraud and cybercrime is outright rampant, and AI is only enabling these threat actors more. What advice do you have for business owners as it relates to their banking and finances as it relates to cybersecurity right now?
Yeah, I think put fraud tools in place, right? Banks are doing a good job keeping up with technology and understanding it. Have those fraud tools in place. Even there might be a cost to it, but at the end of the day, it's going to save you a ton of money in it when that adversity happens.
Mm-hmm.
So listen to your banker and talk about it.
And when you say fraud tool, what do you mean?
Yeah, I mean there's ways that you really manage what comes in and out of your account on your phone for yourself.
Mm-hmm.
You can verify every payment that comes out of your account, and most banks have made it very easy to say, yes, I did that. I know I didn't do that. And so we can pick it up quickly and not wait till the statement comes like we did 15, 20 years ago, and banking had to wait. Now we know instantly, and there are ways that every electronic transaction comes to the account, you can reject automatically, but you have someone or yourself or your team in the morning approve every one of those that are good. And if they're not, we reject them. So even in checking, the actual checks as well, you can have that as well. So there are tools in place where you can do your best to prevent fraud. It's not going to always, things are going to slip through, I'm sure, but there are ways to prevent that now that banks are understanding this more and more.
Mm-hmm. Mm-hmm. Jeff, how is Scale Bank dealing with fraud?
Yeah, I would agree. Put those tools in place to protect your business, watch your accounts, but we're constantly encouraging our customers to train their staff, because with turnover, your business might be great preventing fraud, but people you're selling to might not be, and cable clerks who are getting emails and legitimate emails and maybe not following up properly or trusting the phone number that's on there, or just making sure all those controls are in place. So it's always constant training. So the fraud's not going away; it's more sophisticated all the time. And so it's just an ongoing issue.
Mm-hmm. Right, and internal processes and procedures, and making sure that one employee doesn't have access to the entire account and the ability to wire it out. So, Josh, did you have something to add?
Nothing to add.
Oh, okay. Now, Natalie, you want to chime in on what's happening at Associated as fraud protection goes?
So really, I like to talk to clients about positive pay. That's in our treasury management department. Each one of the banks online here has a robust treasury management department, which can help educate clients on those items that are available to them. So the AI tool that's really helping with that is learning the business owners' behaviors, who they're really sending funds to in and out. And that is something huge that's going to be coming in the future. So.
Okay. So I wanted to maybe kind of backtrack a little bit to what we were talking about earlier. There's been kind of this, there's a lot of chatter online right now about loan defaults and liquidity issues, and in the world of AI generated social media content, it's hard to discern what's really going on. So what are you seeing in terms of bank loan defaults and the issue of liquidity with your banks? Do you want to take that on, Joe?
Boy, it's a great question. I would say working with the business owners to understand costs are rising, and that you do have to run your business on a daily basis. Understand that. I've got a particular client that that's what they do. They have a business, but really what they do is look at their financials, look at their cost of buying their goods and their products to make sure that they have to when they have to take their product out to market, it's still being profitable in the environment they are today, and be willing to take those costs and have to give it back to the consumer. You can't always take a loss because you charged something last year. There is rising cost environment, and that's where in this one particular industry they're being successful and maybe some are not. So you just have to be honest that you're running a business at the end of the day. Yes, you have a product or you have a service, but you still have to understand your numbers, and you have to understand that those are changing on a daily basis, especially with this unpredictable situation that we're all in 25 and 26.
Mm-hmm.
I think it's even more crucial to understand those.
Mm-hmm.
I think Joe is spot on. I think a lot of small business owners struggle with, they'll be working in their business, but they're not working on their business and understanding the margins. A lot of the scenarios where we're seeing loans not perform, a common denominator really, I think, is that, Joe and James, is are you working in it or on it? It being the business and understanding your margins. And a lot of times, folks will have if there's a concentration risk, or if they're in a franchise business that isn't performing as they thought it would, if you're working in it and not on it, that just kind of all of a sudden hits you in the face. Where if you were working on your business, you would see that margin compression, or you would see it a little bit ahead of time. And so I think that's where folks can take a step back and know the numbers and the margins. They can combat that.
Jeff, thoughts?
Yeah, I mean, I would agree. Working on the business, especially with vendors and supply chain, make sure you've got diversification. If something happens, that you're not so dependent on one source. Just again, being aware, being applying for the unexpected. That would.
So, I mean, for somebody who's thinking about using leverage moving forward, I mean, what are the pitfalls? What are the mistakes that they need to think through before they start borrowing?
I think it's really easy for folks when they think about leverage to get married to the projections and to think about, what, 8 months from now, this is all a moot point, and I'm going to be, making so much money, it's crazy. And there's, they don't know what they don't know. And the same is true for me. But that's where, helping folks understand, do you know your fixed and variable income and expense drivers? Are you being conservative? This is leverage. This is a personal guarantee. Cash is still king. And just helping them understand that there are big time constraints here, and so try to be as conservative as possible.
Mm-hmm. Yeah, Natalie, earlier you were talking about a stress test where you're looking at sort of what does this look like with 2 times the the interest rate, right? So what other tools do you recommend for owners as they're evaluating these options?
Well, again, working with your, looking at things maybe quarterly, finding out what are affecting your margins. A stress test is great to have when you're doing an annual review or at maturity, just to make sure the business is on track. One of the things that I've noticed in manufacturing companies is having them, they're locking in their price on foreign trade on the items that they're receiving for a longer period of time, which is helping as well. So that's, what I'm seeing is line credit increases for them to be able to have availability to look in those prices to keep costs down.
Mm-hmm. Mm-hmm. Yeah, that's a interesting question too, and I'll kind of throw it out to anybody who wants to chime in. But how are you seeing tariffs affect your clients, and what strategies have been successful for those companies to manage through this uncertainty?
I have one in particular right now, James, where he was going to have, I'm going to make up a number, I'm wrong, a 30% increase on the price. I don't know the exact amount. If he didn't order by year end or whatever the date was. And so he paid cash for a lot of it. And keeping his receipts, that way we can document everything, because it is a startup business. And so, that can count towards your downstroke on an SBA project. You're not going to get reimbursed in that situation, but it can count towards your 10% down payment requirement or whatever the bank would require, provided the nature of the financing. But that's where we could give zero assurances on getting the deal approved. But in his opinion, it was, the opportunity cost was, high to the point where he just needed to start paying for stuff, and then we'll put on the financing later because of tariffs.
Mm-hmm. Mm-hmm. Joe or Jeff, do you have any examples you can throw in?
Yeah, I have a client that needs a lot of steel, and obviously there's obviously a big tariff there. He's really had to negotiate with his clients and understanding and educating his clients on why a cost may have to go up. Now, they've also negotiated other items that aren't necessarily affected with the steel, but other items that maybe they can lower the cost with other vendors. So again, working, understanding that how to still have the same margins, understanding the business is the biggest piece of navigating through these tariffs, and educating your customer base that this is what this is. Mm-hmm. For now.
Mm-hmm. Thoughts, Jeff?
Yeah, I mean, it's a case-by-case basis. I wouldn't say it's been a massive bank-wide issue. I think in one specific company, a large customer in Canada just didn't want to do business in the United States anymore. They were upset, and just more political than, so it really depends on the situation. But just educating, like what Joe mentioned, and just it seems to change. There's always these tariffs, and then they're not tariffs. It hasn't been like a set policy per se. I mean, it's the threat of it sometimes is, it's hard to follow. Let's put it that way.
Yeah. Yeah. Well, so I mean, not necessarily. I mean, it could be, but not necessarily related to tariffs. I'm just curious, sort of overall, what's the one mistake that owners are making that is just a problem for you? Like what's the one thing you call it? the don't do that for owners as they're trying to work with a bank.
I think don't hold back information. Good, positive, negative doesn't really matter, or may not be consequential, but just don't hold back information. We're all here to help. We're all here to help somebody create a dream for somebody else, create jobs for people. And if you're willing to give us all the information, we'll be able to help the best we can. The moment that you get through a deal and a deal at the last hour changes because we just got new information, we may be able to work through that 2 months ago, figure that out 2 months ago. I think that's the biggest piece that the business owners is like, oh, this may not be necessary. This might change the deal. This may not get it done. Not necessarily. Take it all. We're all going to be creative in how we can make something done because we want to help people. We want to help these business owners be successful.
Yeah. And if there's something that I'm sorry, but if there's something that looks bad, just explain it, right? Because you can't hide it. They're going to find it, right? So sorry to interrupt you.
No, and I think to Joe's point, there's nothing to hide, but it's also, just to take it one step further and, really trying to have the spirit of, collaboration and partnership. It's so often we'll be in on a deal and all of a sudden it turns into a rate game, and that's the only thing that matters is the interest rate. And you say, that's fine. If you want a $7 lunch, it's going to be a $7 lunch. And if you're willing to pay $24 for lunch, then it's going to be different. And that's not like that's an overly simplified example, but I think when people go in and they're just trying to get the best deal and they're not being collaborative and it's purely a transaction, that's never, I don't think that's always the best ingredient for success.
What about you, Jeff? What mistakes do you commonly see?
No, I couldn't agree more. Is be as forthcoming with information as possible. We're only successful if our customers are successful, and if you're experiencing a hiccup, the quicker you can talk to your trusted advisors, the more options you have. So I couldn't stress that.
Mm-hmm. Thoughts, Natalie?
Well, the hard truth up front is always best. So when you're starting to deal, you say, all right, let's lay everything out. To Joe's point, if you find out something 2 months later, and trust me, we will find out. And that's the thing, we will always find out. And that can really tie up a deal. It can draw things out. If you want something done quickly, or you just need to be upfront. Let's get that whole loan package ready before we go to credit. Let's get creative. Let's find all the hair on the deal, is what most people say, and let's work it out before we get 2 months in. That way, everything is moving along quickly, and expectations are met.
Mm-hmm. Okay. And as we sort of roll towards the end of our time here, I kind of want to flip that around then and say, what is the one piece of advice? What is the in your thinking the most important thing for a business owner to be doing, and what action can they take today to have the best results they can in 2026?
I think ask questions.
Yeah.
Be transparent.
I think the fun part of my job is, there's different stages. There's startup companies, growth companies, mature companies, and those looking to acquire or sell. But the one thing of entrepreneurs is the ones that I think are really successful is they love their ideas, and for them to give control or they perceive power to somebody else. But the ones that bring in input are the ones that are most successful. Really, again, harping in that trusted advisors that's how you can continue to grow.
Mm-hmm.
And that's always my advice. Sometimes it's hard for people because they feel like they're giving something up. But you want to grow, bring in good people, and don't worry about the cost of that.
I think what we've talked about through this whole program, right, is plan. Be ready.
Mm-hmm.
Be ready to jump on the opportunity, but it takes working with trusted advisors to do that.
Mm-hmm.
I think that's the biggest thing we can do for 26.
Mm-hmm. And it seems kind of the overall message is, the money is flowing, the banks are lending, the opportunities are there for those that are ready to jump on them. So, all right. Well, that's kind of bringing us towards the end of our session here. I'm checking to see if we had any questions. I don't see any questions that have been posted in the event here. So with that, I think unless anybody has anything else to add, I think we'll wrap it up here.
Thank you so much for having us.
Thank you all for coming. All right. Well, thank you all for being here for the Owners Ally live stream. Again, if you have any questions, feel free to still submit those in the LinkedIn event, and we'll try to get answers for you down the road as well. If you would like to contact our guests, these QR codes will We'll get you to their LinkedIn profiles. You can connect with them there. Thank you again, all of you, for being here today. This is a great conversation. If you'd like to contact me, this is how you do it. Again, I'm James Matheson with VR Business Sales, the Owner's Ally. Thanks for being with us. We hope to see you again soon.